Good evening, ladies and gentlemen. Welcome to this call. Yes, it's Monday evening, 8 o'clock. Time for Crypto Talk, and it's my privilege to host this show tonight. And welcome to this call, everybody. And yeah, it's our privilege to talk crypto tonight and what's happening in the market. At last, we have some green candles. I don't know if you spotted them, but we will go check in with our subject matter expert on crypto trading just now to see what's happening in the market. And tonight we look forward to talk about and discuss TradingView and the charting tools on TradingView. So tonight we will assist you and help you to go chart and to go and get your charting right. So if you have a friend who needs to chart, who needs to get his charting right, this is now your moment to quickly phone them and get them onto the call. So if you have someone that wants to check out the charting in TradingView, ladies and gentlemen, this is your time. You have to get them onto this call now. Get them to jump on the call, send the invite to your friends, get them onto this call right now, because tonight we're going to chart and we're going to look at one or two of the charting tools as per a person, that guest that we have on the call. And tonight we're going to chart. But before I do that, allow me to introduce you to our panelists tonight. And the first, I don't think he needs any introduction anymore, our subject matter expert on crypto trading in the room at the Crypto School. And please say hello to Jason.
Good evening, everybody. I was speaking to a few people this morning after the weekend, and I see the tone of people's voices has changed suddenly. And that is because we've had some nice green candles in the last 4 days. And guess what did those green candles do for you guys in Gauteng? It brought a whole lot of rain, I believe, also in KZN. But jokes aside, we've gone up $6,000 since we last spoke, last week, Monday. It's about 15%. That is just in Bitcoin. And we've seen in some altcoins in the last week and a half, it's actually doubled, like Gala, for example, which is a gaming coin. 2 weeks ago, it was at about 18 cents. It's now at 36 cents. So it's more than doubled. So we've seen some massive moves in the last week. But yes, I'll be showing you the charts after everybody else has introduced himself.
Cool. Thank you, Jason. Yes, ladies and gentlemen, our next guest that I want to introduce you to is none other than the young gun, Andre Smith. And Andre, it was my birthday last week, and I started with you on your crypto journey on my birthday exactly 1 year ago. And what a year that was, Andre.
Yeah, so it was our birthday. It was really an exciting year. And I think with this crypto journey, I think we are getting closer to understand how a woman works, because it's just emotions. So yeah, guys, welcome. Welcome.
Cool. Thank you, Andre. And last but not least, the crypto wealth coach is in the room, Marius Adams. Marius.
Daniel, you can't talk to women like that, my friend. You will get a slap. So it's just tongue in a cheek. It's great to be here. It's great to see all the names on the call on the Zoom. And I know that there's a lot of other names on the Facebook as well. So yes, Daniel, I'm excited. My portfolio is looking better. And we came back in a few coins, and yeah, we've got some great growth, and I'm looking forward to tonight and also sharing to you guys where to get some information from, because my work as a crypto wealth coach is not to do the work for you, but to show you where to get your information from. Thank you, Daniel.
Cool. Thank you, Marius. Yes, I see in the chat box, Gift is saying that she's got no volume. Gift, if you have no sound, you have to leave the room and come back. Unfortunately, anyone that knows Gift, please tell her. I told her on the chat, in the chat box. I don't know if she read that, but if you don't have any sound, you have to leave the Zoom and come back. It happens, unfortunately, happens sometimes, but I trust we'll see Gift back now. So, ladies and gentlemen, tonight, as we heard from our panelists, we had some green candles in the week, and I got all February on us because of the green candles. And Andre, the green candles has nothing to do with Valentine's Day, but we'll get you there still. Don't worry. There's still hope. But Jason, please grab into the markets. I see Stephen Bartwell on the chat box say, nice green candles. I have serious FOMO. I missed a few moves. Stephen, you're at the right place. You will hear that once Andre talk about his FIP and his 168, you will know that you have a chance to get that back. But let me leave that for later. Before we start there, Jason, please just give us a short snippet of what's happened in the markets for the day, please.
Sure, thanks, Donnie. And Stephen, yeah, I understand about the FOMO. I understand about a week ago. A week ago, everybody is very fearful. They didn't know whether the market's going to drop further. They didn't know whether it's the right time to get in. I fully understand where you come from, but the opportunities will come for us in the next couple of days, and I'm going to show you how. Okay, so I'm going to set the, and this is a website called cryptobubbles.net, and what I'm showing you here is the top 100 coins for the week, and what we see is everything green except for one red here. So how's that looking? Absolutely beautiful. And we've seen some, as I said earlier, Gala for the last week has gone up 81%. If you take it for a week and a half, it's actually gone up more than 100%. Sheep, that's had a massive move today, I think. Yeah, 48% today. And you can see that 61% for the week. We've got Leo 38. And then we've got a whole lot of coins around between sort of 20 and 30, which is looking very nice. If we move across here and just have a look at the fear and greed index, last week this time we were at 20, which represents extreme fear. And I agree, at that time you didn't know whether it was the right time to get into the market. But now this dollar has moved up. We're sitting at 45. It's more than doubled from last week, and we're still in fear. But you can see that more and more people are trying to enter the market now. So if we just go down and look at the graph for since 2018, and look at these areas. Every time it comes down to between 10 and 20, and you can see how the whales buy up over a period of time. Remember, a whale can't just buy within one day. They need to take a bit of time, a couple of weeks to buy up, and we stay down in this area for a period, and then they start pushing the price up. And what happens after they start pushing up? We normally go up to these high levels of 80 and 90, and on that dial it's going to the green, where it starts representing greed and extreme greed. So what does Warren Buffett say? He says, buy when the crowd is fearful and sell when the crowd is greedy. So when this dial gets back to the green, we need to be starting looking for areas where to sell. Okay, so let us just have a look at Bitcoin, because Bitcoin is a king and the king gives us direction. So if we look at where we were last week this time, it was the 31st of January at 8 p.m. and we were around about here at 38,500. So we did drop down back down to 36. And then on Friday, we had a massive push up. Now, what's exciting us about Friday is that if you have a look at this orange line, we got a trend line. This is called a resistance trend line that's been in place since the 10th of November. That is almost 3 months now, where price has been trending down, and it's hit a few times against this orange line, but it hasn't broken through. But on Friday, we had, in the late afternoon, we had a push through and a managed to break through. And we saw that what happened on the weekend, we managed to get above this yellow line, and this yellow line is the daily trend line that's been in place since the March, the Corona drop of 2020. And what's happened now is that this morning, today, and the last few days, sorry, we've been up in this area, 41,500. And we have started pushing up even higher. Now, what is really causing this push is called liquidation of shorts. Now, remember that there's a whole lot of people out there thinking that Bitcoin is going to drop. So what they do is called shorting the market. So they'll sell Bitcoin here. They will borrow Bitcoin, they will sell it, and hoping to buy it back at the bottom here at lower levels and make a profit in that way. But if, for example, they had to buy in this area, for example, they would put a stop loss in place a little bit higher. And those people that bought, for example, in this level, yeah, they would put a stop loss a little bit higher, and so on. Now, what happens is, as price goes up, it starts hitting these stop losses. Now, in order for a short to cover a stop loss, they have to buy back into the market. And this causes a ripple effect where you've got dominoes falling at all these stop losses as they get hit up and up. So you've got a whole lot of jet fuel pushing price up with these shorts and buyers coming into the market. So that is what's really now pushing this up to higher levels. Now, we just have to be careful right now where we are, because we are coming onto some resistance. And the resistance here at 45,500, if we go back in history and just have a look here, you can see here where this 45,500 was a support line. And what happened is that we dropped below that support on the 5th of January. Now, when we go up, that support now becomes resistance. So we are going to be seeing quite a bit of resistance in this area right now. Okay, so that is just one thing that you need to keep in mind. If we go and look now at some other charts for clues, and I'm going to be looking at the total market cap. And if we look at total market cap for the last week on the weekly chart, let me just rather go to maybe daily. Let me go to daily here. In the middle of November, the 10th of November, we hit $3 trillion market cap. But since then, we have dropped, and we dropped down right down to 1.5 trillion on the 24th of January. And that's where the turnaround happened. And we have now gone up. And we are now at the $2 trillion level. That's one thing. The second thing is we've got the orange line that's coming down, which has played resistance, and we haven't broken through like Bitcoin's broken through. So what I'm saying here is that we are at an area of resistance on the market cap also, where the 2 trillion was support before, but now it's resistance, plus we've got this orange line coming down. So this is the second clue that we could be hitting resistance. The next clue is the USDT chart, and this shows us whether money is flowing into trading crypto or into stable coins. And if we go into the daily chart here on the USDT, we can see that we've got this support orange line that goes up from also the 10th of November. And you can see that we are coming down to test the support. So this also gives me a clue that we could possibly see a bounce in this area. The indicators are telling me the same story. If I put the indicators on the 4-hour, the stock RSI is right at the bottom, ready to turn up. If I go to the RSI, you can see it's on oversold area, and it's ready to turn up. Now the inverse is happening with the total market cap. You've got the total market cap at overbought areas on the 4-hour, and the stock RSI right at the top also. If we move over to Bitcoin and we do the same on Bitcoin and put the indicators up, we can see that on the, let's go to the 4, the stock RSI is right at the top. If we switch on the normal RSI, you can see that that RSI is also on the overbought area. So what it's telling me is that we could be seeing a reversal quite quickly. We're also taking lead from stock market. If we have a look at stock market and specifically the S&P 500, S&P 500 is in an upwards channel. And what happens with the channel that goes up, there's a 68% chance of a break, it's a break to the downside. And this is all on small time frames. So we could see a bit of a drop in the stock market in the next day or two or so. So what, if we had to drop now, where could we possibly drop to? Now, another clue here is on a chart called the Cme chart. Now, this is The CME is a Chicago Mercantile Exchange, and what it measures two coins which gets traded on the exchange, namely Bitcoin and Ethereum. Now, the big whales and the investors mostly trade on this exchange, and they only trade on a Monday to a Friday, whereas the rest of the market trades 24/7. But if we trade over the weekend and Bitcoin either moves off Friday's CME price up or down, and we open up on a Monday, we tend to leave a gap. And that gap normally gets filled quite quickly for the following week. So if we look at the CME chart here, we closed last Friday at 40,760, and we opened up this morning at 41,400. Now there is a small gap here that needs to be filled. And my idea around this is that we're going to have an opportunity where price is going to hit resistance now at 45,000 and possibly come down here in the next couple of days to fill up this gap. So Stephen, to answer your question around FOMO, a bit more patience. I think, as I say, we are definitely going to come down here, and I'm going to mark out that area of 41,400 to 40,760. That'll be 40 to 41,400. So I would say that we need to come down to this area here to have an opportunity of buying. And you can see there is a support line down the bottom here of 40,556. Secondly, we have got this yellow trend line that I said has been in place since the Corona drop. So I think we would come down and possibly test this area here. You can also see on the 4-hour where the candles moved up on Friday quite quickly, and there is, in trading terms, liquidity down here that still needs to be captured. So my belief is that we'll definitely come and test this area in the next couple of days. And that's it from our side, Donnie.
Oh, thank you, Jason. And I think no one can say it more eloquently than you. So thank you very much for that. And who will agree with me that Jason really makes it easy? And I even follow him and I copy his lines that he pulled in. And sometimes I wished I could just go delete some of Jason's lines because they become resistance. But once those lines become support, I root for them like crazy. And so, Jason, thank you for assisting us there in understanding the market, just understanding what has happened over the weekend and on this Monday, and where we're going to go, what we see happening in the week. And that CME gap has caught a few people out and fell into the market at the wrong time. And so thank you, Jason, for that. Anything else you would like to add to that, Jason?
That's it, Donnie. But as I said, when we get down into that area, I think that'll be a good opportunity to get back into the market. But just remember what I said, guys, right in the beginning of the year. This year is going to be very volatile. And the reason why it's going to be volatile is because of inflation. There's a lot of risk around the interest rates that the Fed want to push up. There's a lot of risk with regards to the stock market and also more specifically to the debt market. Because if the debt market implodes, that's going to cause the stock market to drop, that will cause the crypto market to drop too. So that's why we spoke around risk 2 weeks ago, that you need to make sure that you've got tight risk place.
Cool. We have to have tight risk management policies in place. And that's always a thing in crypto. And I have to be congruent and honest and say I've not always followed the best stop losses or risk strategy. And I'm learning. And that's the beautiful part of this. But remember, guys, girls, you here on an invitation telling you that tonight we talk about TradingView, and tonight we're going to look at charting tools and help us and assist us to just look at the fresh view, have a fresh look at the charting tools. And let's start tonight, not with Jason. We always start Jason after his eloquent roundup of the markets. We continue with Jason, but tonight we said we're going to flip it around. and we're going to ask the young gun to start our trading tools for us tonight. And he's a boffin on Fibonacci and other tools, but we asked Andre to tonight just come and show every one of you in the room. Open your TradingView and do what Andre is doing with you. If you have two screens, open your TradingView on another screen and duplicate what Andre is doing. Otherwise, my apology, the video is live on Facebook, but it will be on the YouTube channel tomorrow morning, first thing. And make sure that you go rewatch this. And Andre, please help us, show us. You always talk about your 168, and it will retrace and come back to the 168 box. And you put your Fibonacci down there. But Andre, tonight, don't tell us to put a Fibonacci down somewhere. Tell us what a Fibonacci is and where you have to go put it down. Show us slowly so that myself can understand it. Thank you, Andre.
Thanks, Rom. Yeah, so first of all, it's to help you understand it more. It's not 168, it's 618. But no, I'm just joking. Guys, so I think before I want to start sharing and sharing how it works, and I don't know everything, but what I do know is that doesn't matter what tool you're using, what strategy you're using, it's not always going to work. And then the other thing is the institutions know how their strategies work. So they also know and they will go for your stop losses at some point. So I just want to get that out of the way. And before I share my screen, just move this stuff around. Okay, so I just quickly want to share the screen. And here it is. What do Fibonacci numbers and lines tell you? First of all, this is a Fibonacci tool, and I'll share it slowly with you guys now. So this is my Fibonacci tool. So basically, from that point to that point, that is 100%, and that is 38.2%, and that is 43.7. 38.2, that is 50%, that is 61%. So this is actually just percentages, and you can go read up about it. It's actually quite interesting how it works, because there's a lot of people that did research, and you'll see the 618 and 786 lines in the nature and in your body, and I don't know how they where they got everything from, but that is numbers that is really relevant everywhere. So yeah, let's go to this. And they say some traders believe that Fibonacci numbers play an important role in finance. As discussed above, the Fibonacci number sequence can be used creating ratios or percentages that traders use. These include 23.6, 382, 50, 61.8, 78.6, and it list goes on. There's actually a lot more numbers that they use, but this is what most traders use, and I use them, but just until 100%. You can use the other ones, but I'll show you now what I mean. And Umdani, you can just tell me if I go too slow. So first of all, now let me just delete this. Where do you find them? So you'll see there at the top. Let me just make the screen a lot bigger. Okay, so first of all, just below the trend line button, you just go there. There's a lot of stuff. So you'll see there's a Fib retracement and trend-based Fib extension. So what we're going to use is the Fib retracement. So what I usually do with stuff that I use most is I add them to favorites. So you'll see that at the bottom of my screen, it's adding it there. So this is the stuff that I use the most. So you can move it around and whatever. So when you click on that and you draw this, so now you can either double click on it, or you can use this tool and click on settings. So here you can see, you can change the style. So this is my style. This is what I use. So if you want to use the same stuff, you can take a screenshot or just take a photo or go and watch it later. But this is my tools that I use. And you can actually come and save here. Save your tools that you use and what you prefer. So I have this one, and then I have one that's lighter, so it's a Fib light, so it doesn't bother my charts. So yeah, this is one that I use the most. Fib to that one. So this is the one I use the most. So let me quickly show you guys. So this is on Solana. This is the coin that I wanted to get into, and I never got into it because there's a rule that I got taught by Lee because he uses the Fib tool and Elliott wave and everything. And he says that if the coin isn't in his 618 and 786 zone, he's not investing in it. Otherwise, he's just trading in it. And I strongly believe that. And that's why I only invest there. So this is the reload zone that we call the reload zone. And the 618, and I can't tell you guys why, But that is the thing, the 0.618 and 786 level is the golden zone, the golden ratio, what they call. And this is where the stuff usually retraces. So this doesn't mean, and you can't use this you can't just go and put this in the chart and just go buy and sell regarding the 618 and 786 zones. You use this as a guide. And when I want to invest in a long-term coin, what I do, and let me just clear this a bit. So what I usually do, I'll just clear. I take the bottom. So what you do is you take the bottom of wherever you think. I know if I have seen Elliott wave a bit, so that it has that 1, 2, 3 lines, and it's a bit confusing at start. But anyways, so I use, and there's not a right or wrong. It's just gonna have different percentages, and it can't be precisely. So I just take the bottom here, and then you go to the top. And then you have your 618 and 786 zone. So this is what we call the reload zone. And this is where institutions usually add some to their bags. And that is where I would like to invest. But I only usually invest when there is some bullish divergences or stuff like that. So just one thing to note. But this is all, the 382 is all lines where the market where the market has some kind of retrace. So you can use it from the bottom to the top or from the top to the bottom. So if I want to know where the market can retrace, then you take it from the bottom to the top. And that is when you want the market to come down. But if the market is already going down and you want to see to where the market can go up to, you can just go and click there to the top, and then you can just go click there. So there you can see it went to that 618 level. So now you can use this on any time frame, but you can either drag this, lower, and look there. Sorry, there's a fly or something. There's the 618 again. So you can either drag this around, or you can use it as new ones. So you can use it as new ones, and there you see it went to the 786 zone as well. Yeah, so we can go on and on. But what I said in the beginning is that the market makers know that we use these tools. And I'll quickly go to the Bitcoin chart, and I'll just delete this one here. Sorry, and that one. So here you can see this was the March drop, and that was the previous all-time high before November 2021. So this was April 2021. This was the high, and we had our line there from the bottom of the March drop to the top there. And they knew everybody's waiting for that 618 level, and they didn't give it to us because they don't want the bus to be full. They want to make profit, not with everyone, they want to make profit themselves. So that's one thing to note, guys. It doesn't always work exactly like that. But I have a new reload zone. It's just a bit higher because of the all-time high. That's a bit higher. And the other thing, sorry, let me just delete this. Just want to get back to where I were. So the other thing is you have something called the Fib extension tool. Now I'm not going to go too much the trend-based Fib extension tool, and I'll quickly just open this so you guys can see what is the settings that I use. So you can just quickly screen grab this or take a photo. This is what I usually use, and it's hard to say when is what going to happen, and that's more with Elliott wave. But anyways, so how this thing works is you take the bottom. You can take it from anywhere. So for instance, you can take this bottom, and for instance, there's the top, and now you have another low, and then it can show you where the market is going to retrace. So this is just some tool that I use as well, but I mostly just use this for retracement tool. I really like it a lot. Yes, GHX. This is a gaming coin. I just quickly want to show you guys. I told you guys that for long-term investments, I use the 618 and 786, but with coins that is low liquidity, not as such with Bitcoin and Ethereum and Solana, that coins that's big with high liquidity. So these coins, we use the 786 and 886 zone as the reload zone because they usually come here. And look here. So there is the strong bullish divergence. This is what I like to see in this retrace zone, where the market usually come. I use that to get into the market. But within this zone, you can just place some orders in. Don't have to buy all at once because the market gives you time. So I don't know, Umdani, or if you guys want to add something, if you want to say something, Jason, if you want to say something. And again, guys, this is just a tool. This is not given. This is not 100% guaranteed that every time it's going to work like this. It's just a tool we use. For instance, this is to see support and resistance lines. And it's not a given that it has to retrace there.
Cool. Thank you, Andre. And yeah, we asked you to show it slowly, and you showed it slowly to me. And I had to make a note to get your 618, your 168 the other way around. But at least I got your attention. But Jason, comments with regards to what Andre has shown us?
Yeah, Donnie, I think if you look at Fibonacci, it works out very well based on human emotion. I think for new people to really understand it is quite difficult. It takes a bit of time to get your understanding around it. But once you grasp it, you use it over and over again, and yeah, it becomes very useful.
Thank you, Jason. We will be back with you just now. Andre, comments on what you shared with us? You've now had a minute to get your thoughts, comments.
Yeah, I just have to stretch it again, guys. With every single thing that you can learn, it's not a given that it's going to work. And the market makers, and listen, the guys, they have a lot of money and they can make with the market what they want, and they know how we trade. It's not a given that it has to be like that. And there's a lot of different tools that can show you the same stuff. And I'm pretty sure Jason has other tools that he uses that can show him the same stuff as what the Fib tool, for instance, shows. And it's not like the one fits all. Like you can use any tool, it can probably give you the same answer.
Cool. Thank you, Andre. We go to Marius. Do you have something on TradingView charting that you would like to share with us tonight?
Yeah, as you can know, I'm just in the beginner phase. So I recently just bought myself an ultimate trading course. So we went through the whole TradingView. So there's so much tips and stuff in that. And what I love about the thing, just the first module, if you can see, I just took a screenshot of the.
You have to share it, buddy. Yes, you're going. Cool.
Of the one of my first module. It is over 1.5 hours just of the basic stuff in TradingView. So I'm busy with that now. They've got a whole lot of volume or chapters, volumes, moving averages, Fibonacci tools, and. But the detail that these guys teach us is great. Just from my side, I'm not going to go through everything here. It's going to take a while. But a nifty thing that I learned here, you can see, Andre, I also have a shortcut tool now. And it is so great when you click on anything here and you add it to favorites, it will come to your shortcut tool. But one thing that I want to show you is the shortcuts on your TradingView. So for instance, if I want to do a horizontal line, you can see there my Mac is a bit different. That is an Alt and H, so it is just easier to go Alt H if you want to put in a horizontal line. Alt H, you will see there's some shortcuts that you can actually memorize yourself and actually use that. So that is quite a nifty tool of TradingView. And one thing that I also discovered here in the course is this. At the bottom, you will see there's a thing that says scroll to the right and scroll to the left. It just help and assist you by using your keyboard as well instead of using your mouth. So you can see there's your zoom in and your zoom out, and there you can also on my Mac. But if you hover over that, if you have another computer, it will show you the shortcuts that you can use. There's your up and there's your down. So yeah, Donnie, this is just a few basic stuff, but it really helps you to navigate around TradingView. So I will share small stuff every week with the stuff that I learned. But this ultimate trading course, for me, I know Jason and Andre, you taught yourself through videos, the YouTube videos, but I personally need something like this where I can have physical education and a physical workshop. So Daniel, yeah, that's all from my side tonight.
Cool. Thank you, Marius. We appreciate that. And yes, I can only echo what Marius is saying is every time I use TradingView, I click on something different and I add something and I add a bit of knowledge to what I already have. And every time I just try and click on somewhere else. And that's something that Andre has pressed into my head, is you cannot break it by clicking on stuff. Also, we just don't click anywhere, but unless we know what it is. So now I am clicking away and I'm learning amazing stuff within TradingView. And I'm very excited for what TradingView can offer me. I have the privilege of having a paid TradingView account. I don't only have the free account. I have a paid account, so I can do a little bit more than the average guys. But every TradingView that you've seen tonight is a TradingView that's on a paid account. So that means there was no advertisements coming up. Jason, we're back with you. You had to wait with all your indicators and all the tools that you would like to share with us. You had to wait and listen to Andre and to Marius and to myself chat away, but it's your time to shine, buddy.
Thanks, Daniel. So tonight I just want to show you really what you need to use in order to trade a trend. So what I talk about a trend is where you buy now and where you sell in a couple of weeks. This is not scalp trading or any smaller time frame trading that I want to show you tonight. So I presume that the audience understands how, first of all, how to load a specific chart onto TradingView. Let me show you quickly. It's very easy. You click on the plus button on the top right-hand corner and you put in it's called a ticker. So the three letters that represent that specific coin. And let's use Bitcoin. So everybody knows Bitcoin is BTC. And you would use the pairing, for example, USDT or US. I'm going to go to USDT. You then click the plus sign. Once you click the plus sign, you see it add to watch list. It will be added to the bottom. I'll take it off and I'll put it back again. So you've got Binance back there again. So once you click the plus sign, you just close this off and you'll find that your chart that you've loaded is loaded at the bottom. So you click on it, for example, there, and what will come up on the top left-hand side is different time frames. Now, because we're trading the trend, we're not going to go less than 4 hours because smaller time frames is used for like scalping or trying to get a possible entry. So let's go on 4 hours, a whole lot of different colors. These are called candles. So red represents a downtrend and green represents where the price movement is moving up. Now, this is all human emotion. Where we've got a human emotion that is fearful, price drops. Where we got human emotion that is greed, price moves up. And this happens over all different time frames. So to get these different colors, you just right click anywhere on your template and you go through to the bottom where it says settings. And with the settings, you've got your symbol, you've got your body of your candle, you've got a border that you can go around the candle, and the wick is obviously the long wick at the top. And you can change those colors to what your preference is. The price ticker, which is this price here, the actual price, current price, you can change it to different colors. You can see I've got it as white, and you can change the thickness at the bottom to, you've got 4 options. That's how you do that. And then once you've done that, you can click OK. Now to change it from black to white, you just right click it and choose color theme, light or dark at the bottom there. And you can change it to that. Okay, so that is the basics. Now you've got a price chart here. Now with the unpaid version, you're allowed 3 indicators. So the indicators that I suggest that you put on here is the moving averages, 2 of them, the 20 and the 50, and the RSI, the stock RSI, sorry. So where you find that, if you go to the top here and you click on indicators, metrics, and strategies, you just click on it. And I've already got them as favorites. So you click on moving average twice, or if it's not up there, you just type in moving average and you'll see it will come up there. So you click on it twice and you'll see it will appear here on the left-hand side. The third one that you put in is the Stochastic Rsi. And you click on that. And what would happen? It would appear here at the bottom. So let us switch mine on and let's switch on the moving averages. And I'm going to just make these bands a little bit thicker at the bottom here. And you can see that the thickness is grown here. Now, this is all you really need to use when it comes to trading. And the reason why I say that, if you're trading the trend, and you must remember that the moving averages is not a leading indicator in the sense that we sometimes find that only once they cross, prices already moved up. So in this instance, for example, in September, we started moving up with Bitcoin on the 29th of September, and yet the green, which is a 20 moving average, only crossed the red, the 50 moving on the 11th of October. So almost 2 weeks later, only crossed to indicate that the market is moving up on the daily. But that is a good indication to say that the bull market is happening and that we are moving up. And now if you see, for example, on the 15th of November, where we started dropping in price on the daily, the 20 moving average only crossed the 50 on the 27th. So once again, 2 weeks later, only crossed to announce that we have got a possible drop in price. But why do we got these? If you look at history here, price always tends to sometimes move away from these indicators, yet come back. There's a lot of instances where we see, like, for example, on the 50 moving average, where price moves away and yet it starts moving back close again over time. So that's a good indicator to indicate whether we're up. If we're above the 50 moving average on the daily, that's a good indication that we go into a bull trend that is in play. If we're below the 50 moving average, that's not a good sign at all. So right now we started crossing the 50 moving average today. And that is a good indication that the bull trend is in play. Now, if we have a look at the Stoch RSI, now the reason why I say the Stoch RSI is always good is because when the Stoch RSI is on the 4-hour and higher time frames, that is not a good time to enter the market. We need to look for entries on a smaller time frame, and I normally look at once the Stoch RSI on the 4 hours come down and reset at the bottom, the daily is also coming down to lower levels. I then go into smaller time frames to look for entries, and I normally look at a 15-minute, and I'll wait for the Stoch RSI to get to the bottom and to start looking for entries around there. As I said to you a bit earlier when I showed you the charts, I said that we got to overbought areas, and you can clearly see on the daily, for example, that the Stoch RSI is very high. It is starting to cool and starting to cross to the downside. So this gives you an indication that we possibly got a drop that's going to be taking place fairly shortly. And as we go into higher time frames, like for example the weekly, this shows us that we've only started to cross at the bottom on the weekly, which is a good sign that we still got a long way to go on the weekly, for price to move up. So those are the three indicators that I'll suggest that anybody that's got an unpaid account to use in their trading. Now, when it comes to also to entries and to exits, I use basic trend lines. So the basic trend line is if you go just below the cross at the top there, you got your a trend line. So you click on that and you go to the daily, and you would put a trend line in place here. So let me just fix this chart up. So like, for example, in the daily here, I said that we had a downtrend, and I'm going to switch off these moving averages here. We had a downtrend from the 10th of November. So you would just put a basic trend line in here that touches as many of the wicks of the candles as possible. Try and get them right at the top if you can. And the reason why I put this in, as I said to you, when we see a break of the trend line, that is a very good indication that the trend has actually changed. So there's a saying in trading terms, the trend is your friend until it bends. So where it bends and starts going up, it's showing you an indication that there's a change in the market behavior. If we look at, for example, where we had an uptrend in Bitcoin from September until November last year, we can put another trend line in place here where you connected some candles here, and basically what happens is, I can just draw this one in there, could have been like that. So that's a basic trend line. What normally happens is that you break out of the trend. It normally goes down, it comes back up, it retests, and then it goes down. So you can see there clearly it came up and it retests. Now at that retest area over here, this is a good place to obviously get out, because if it doesn't break through that trend line again, there's a good chance that it's going to drop. Now the same thing happens at the bottom here. We have broken through and we haven't come down to retest this breakout. So that's why I said to you, we've got a good chance of us actually coming down now and doing some sort of retrace before carrying on with the bullish price movement. So these are this trend line is, I would say I use it the most when it comes to entry and exits in the market. And yeah, and I even use it on my altcoins, for example, for entries and exits out of the market. And that's really a very, very basic way how to trade. That's all from me, Donnie.
You make it always sound so freaking easy. And if I just have your charts every day, I will trade differently. But I'm not going to let you slide. I'm going to share a screen as well. And I'm going to show you a screen, but I'm going to show you a screen of an actual trade that happened on my system. And this is how I chart trades. So today, what I want to show you is how do I keep track of a trade, for example. And let me just get my slide back there. So this is a purchase that I've done on the charts, and that was on the 28th of September 21. Done a purchase when I heard and learned about a coin called Super. I've tracked it for a little while, and I've made a purchase on my wife's account on the 28th of September. I then tracked the coin and it's gone crazy. But what made me trigger that sell? Because there you can see I had a sell 50%. Sorry, the writing is in red there. Let me just rectify that. And the writing should not be in red. Then you will be able to read it. And so I sold 50% of that on that date. But what gave me the indication to sell that? And it's the cool old RSI trick that Jason has talked about. I've just tracked the RSI. The RSI gone dilly, gone boss. And on that retrace of the RSI, that breakthrough of the RSI, exactly at that very moment, if you go to my chart, you will see that exactly at that very moment, I just sold 50% of that coin. Now, I could have done better. I should have sold in 3 ladder out options. I did not. I didn't have the time. So I just sold 50%. My problem is I need to get back into this coin again with that 50%. And I think after today, I know that it's a breakout. I've deleted it because I don't want to bugger up the slide. I want it to be clean. But I had a trend line in here that was just going through there to there. And that line was broken and something like this. And remember, there's no perfect line ever. But I had that as a resistance line. And I think that we're breaking through that line, and we're well on our way to leave that line now. So maybe that might be the indication. So what I need to do is tonight, I've seen Andre's FIP. So I have to go draw a fib in there and go see what it will retrace to decide whether I'm going to buy that coin again with that money. But remember, the money is not from here. The money is from there. But I could have done nothing and still sit now again with all my money here at the same price than it was on the 28th of September. That's why we share with you. That's why we're excited about TradingView. That's why we're excited about having a team around us. Having the team, we get out of the market at some points. Yes, I could have done a lot better with that coin. I could have gone another 10 or 15% higher to get out at a better price. I don't wait for the best price. If what I read in the chart says get out, I get out. If I read what the chart say get in, I get in. And I have a few coins where the chart is not as rosy as the one that I've just showed you. I've just decided to show you that one. Last comments from everyone. Andre, we start with you tonight. Last comments for you with regards to TradingView and the charts.
Sorry, can you guys hear me?
Yes, we can. Why not?
Yeah, guys, every day is a learning curve and there's so much to learn in this market. Dani, like you said, you're also still learning and I think we have a long way to go. But I think the major problem we have when you start is we try to make it so complicated as we can. And we get all these indicators and all this different stuff, and you're just going to confuse yourself. So learn stuff and test it. You can replay on your TradingView, go test it, go play with it. And if you like it, then you use it. If you don't like it, try something else. And I think that's the biggest thing. Don't overcomplicate everything.
Cool. Thank you, Andre. Appreciate that. Marius, last thoughts from you.
Yes, Daniel, I like what you said. You can't break Mandla. Just to answer you, Mandla asked what packages and where can you have a look at TradingView. Jason answered you on the chat box, but this is just for the Facebook guys. So go to tradingview.com and register yourself a free account. And what we always do is if you have to upgrade, just upgrade to the next one if you really need that. But then wait till November because they always have a great Black Friday special, and that is where we upgrade to our yearly TradingView packages. So guys, go out. The most important thing that you can do is to educate yourself and start small and start with your own strategy and keep with that strategy. Thank you, Daniel.
Yes, as Marius talked about TradingView, I've put in a link to a TradingView account in the chat box. Don't use it. The person who got you into crypto, go ask them if they have a TradingView account that they paid for. And if yes, they have a TradingView account that they paid for, you go ask them for that link and you subscribe to TradingView on their link. They get a small benefit, but that's what it is. The person that got you, the person that's given you the information, that's the person that you honor and just go get the link. I've just shared my link there in the chat box, not for those that are not invited by me, but to show you that there is a link on TradingView and honor the person who brought you into crypto and ask them if they have a paid TradingView account, ask them for their link. And that's what we do. We honor the person that brought you into crypto always. Jason, you get the last word tonight, buddy.
It's like riding a bicycle. You have to practice. And it took me 6 to 12 months to really start understanding how this TradingView works. I just practiced. But what I also did is I watched these top traders on YouTube. And I took their ideas and I started putting that into my charting. But some of those indicators, as I said, they conflict with each other. So you need to keep the basics there. And I highly recommend using the Stochastic Rsi. I use it quite a bit. And the moving averages and trend lines. That's just the basics that you need to use it. And hopefully we'll see some more green candles later in the week. And I think February is going to be a very good month for us, Donnie. Word of caution, once again, is going to be in March. We got the FOMC meeting, which is a Fed where they decide interest rates again. So there's going to be a lot of uncertainty around that area. We're going to be expecting quite a bit of volatility again next month again. But let's enjoy the next couple of weeks.
Cool. Thank you, Jason. Yes, we have load shedding within the next minute. In Pretoria, I have backup battery, so I won't fall off. But if someone falls off, that's the reason. Guys, girls, for those of you who have not subscribed to our YouTube channel, please go find us on YouTube. It's just YouTube, The Crypto School. And go find us on YouTube, subscribe. We have 134 subscribers to our channel. And every Monday morning, I post the crypto talk here. for you. So if you need to go show friends, go invite friends to come, please come subscribe to our channel, hit the subscribe button. There's a subscribe button in there. And this is our YouTube channel that we created only for you. And all you will find on there is stuff with regards to crypto. We are trying and to bring you the best stuff. So please do us a favor, go and subscribe. That's where you will find the recording of tonight. And I think that every one of you should go rewatch this recording and go show your friends, those that want to get into crypto. This is an easy way. It was non-threatening. We did.
But also in the dark. Thanks everybody for joining us tonight. And as I said earlier, we'll see green candles for the rest of the week.
Cheers. Enjoy.